Yo guys, Matt from Upside Mining coming back at you with another video. Now I did notice there are a lot of videos going around from content creators going over why as soon as your power bill reaches or exceeds the amount of coin that you're yielding back from the mining operation itself, meaning let's say you spend $1,000 in hydro per month and you essentially mine $900 worth of Ethereum. You're technically at a net 100% loss, correct? Not always, and let me explain why. And let me just preface this by saying I'm not a tax accountant and I'm not a financial advisor. Do your own research, but this is based off of some research that I've done, and given my personal situation, and perhaps some of yours as well, how if you have an existing business, okay, if you have an existing business, you can leverage your revenue from that business to fund your crypto mining operation at technically a loss. And let me explain how do I mean that. Okay, so in Canada and in other jurisdictions of the world, if you have like an LLC or a corporation, you are afforded the privilege, which is not a right, it's a privilege, of expensing your deductions. So let's say you have a restaurant, right, and you have to buy equipment for your store. You can write off the depreciating value of that equipment over many years until essentially it's all been written off. Let's say it costs you $1,000 a month to pay for the electricity to run the ovens, the lighting, everything in there, the heat, the gas bill, anything, the taxes on that space, the rent on that space, and things like that, right? So the government basically, let's say you make $100,000 a month and say you have $50,000 of expenses, okay? Your expenses can be, I'm not a tax accountant, so let me just, this is from my experience and what I'm doing as a corporate entity in the software development field. But this could be anything, essentially, if you're incorporated. Let's say it costs you $50,000 to run that restaurant, okay? So let's say $25,000 of it is to pay your staff, okay? So we're talking their base pay, CPP contributions that you need to make, EI, whatever else, right? 25 grand's gone just to pay your staff, okay? The remaining $25,000 of your expenses comes from things like, for example, buying supplies for that restaurant, plates, knives, cutlery, food, ingredients, the tables themselves, uniforms for your employees, signage, marketing, electricity, yes, of course, everything else to run that business. And you make $100,000, okay, in a month. $50,000 is technically now profit. You take the $100,000, you minus your deductions, okay, and you pay tax based off of the profits of that. Now, in most jurisdictions, that, from what my knowledge is, and correct me if I'm wrong, if there's any tax accountants in the chat down there, that you need to pay your tax based off of profits. So if you made $100,000 in a month and it cost you $50,000, that's the cost of operating that business. You pay the corporate tax rate here in Canada, I think Ontario is around 15% on the remaining amount. Obviously, you're going to collect your HST and GST based off your province, and also remit that to the CRA here in Canada, right? And the similar rules do apply to different jurisdictions. It doesn't matter if you live in the UK, or if you live in the US, live in Canada. There's similar rules that are applicable here and there, and they may be different. Once again, not financial advice. Let's say you have $50,000 remaining, okay? You could take $50,000 and put that into hydro for a crypto mining operation, and that all becomes, as long as you can show that you are actually now mining crypto as part of your business operations, you can take the remaining $50,000 and spend it all on hydro, okay? In which case now you don't pay taxes, income tax, corporate income tax on the remaining amount because you spent it all to do more business, right? Let's say you're the business owner, okay, and now you decide you want to take the $50,000 that's left over and pay yourself with that. That's where we get into a problem here, okay? Generally, as a rule, in most places, a lot of businesses get benefits for running the business, right? Like I mentioned earlier, you get the benefit of being able to write off various expenses, right? This is no surprise to anyone. But if you go and you pay yourself that extra money, in most jurisdictions, personal income makes up a huge portion of the government's revenue. Believe it or not, you will pay more by paying yourself personally. Let me explain that for a second here, okay? So if I take, let's say I have $1,000 electric bill for simplicity here, okay? Now, if I'm taking that $1,000 out of my own pocket, I've already paid a huge portion of that in tax. Essentially, let's say I pay myself the $1,000. Okay, so if I go and pay myself the $1,000, this is where it comes in and makes sense to spend the money on the hydro, which is an expense, versus paying yourself. You're also an expense, but you're going to lose that money. Okay, let me explain that. You take $1,000, you pay yourself that $1,000. Okay, you're going to pay instantly a federal percentage based off the income bracket, right? So let's say I'm focused on these two income brackets here, where there's 20 and 20.5 and 26, and let's just say they line up. We're just going to say we're going to ignore the bottom income brackets because those are. We're going to say that so for these first two brackets, you're going to pay 20.5% on the federal portion. Okay, and then you're going to pay on the provincial portion here in Ontario. Okay, that's 9.15%. Right, so out of your $1,000, you're going to lose $296.50 minus CPP and EI. Okay, so this is actually probably more than this you're losing. You actually only get $703 in your pocket. Okay, stay with me. If you are in, say, this income tax bracket, it only gets worse the higher you go up. You actually lose more. It's kind of like running against the wind, right? Or if, let's say you take a really fast car, right? Even with really good aerodynamics, you'll reach a point where you actually won't be able to accelerate any faster because the resistance of the wind against that object is so strong that there's not enough power in that engine to force it to go faster. Okay, that's actually called terminal velocity. Like when you're falling from the sky, right? There's a point where like you can't accelerate faster because like basically the wind and the resistance of the air stops you from going fast enough based off of obviously different attributes of falling object, things like that. So basically what I'm saying is the more you make, the more you pay yourself, the more you're running against the wind, the more you're paying, right? So if you look at this income tax bracket here, we're at 26%. You're paying 26% on the federal portion, and you're paying 11.16 on the other portion. So we're talking quite a bit here. We're looking at 371.6 tax loss on this one here. So we're talking like we're down to I don't think that the math on that right here. So $1,000 gross. Okay, 630. 307. Yeah, well, let's just round it. So $630. So let's say you pay yourself that $1,000. All right. So you have your business, you have your personal business, and you go and you pay yourself that extra $1,000 instead. Okay. All right. Sounds great. Now you can do whatever you want with that money. You can blow it on hookers, right, or whatever you want to spend it on, right? That $1,000 became $703 thanks to Uncle Sam, and if you make more, that $1,000 became $630. So, from my point is, I'd rather have $1,000 to put towards developing that business than paying myself now. Okay, you understand what I'm saying? Paying myself now and losing that money. So if I take that $1,000 and pay myself, it's not $1,000 anymore. You actually only have $630, or you actually only have $703. Okay. Now, let's say you then took the $1,000 and instead you use it as a business deduction. Okay, so you take the $1,000, it's now 0% tax, okay, because it's a business deduction, and you use that $1,000. Okay, that $1,000 can be used 100% towards the taxable deductions such as hydro. Okay, so which means you can continue mining at a loss even if your loss exceeds $297 a day or even $235 a day. These numbers might be. You kind of get where I'm going with this, right? So you can mine at a loss of 683 per day and 783 per day. You could be losing that much in hydro on your entire farm. This is not per rig, per car. This is your whole operation. You could be mining at a loss because that money would be going towards taxes otherwise. You get what I'm saying? So you continue mining at a loss even in the bear market. if you use that money, okay, so if you have that $1,000 and you have a business, okay, this only applies if you have an existing business. I don't care what your business is. My business is technology, software development, and I work in the IT space, so it makes sense to kind of move into this area, right? But if you can launch a second business and fund it from your first business, invest it into that company, and use that money now that you got from the business to mine the operation, you can actually mine at a loss for a certain amount of time and still be ahead, because you will still get the same amount of crypto as you would before, even with the loss in pay, right? You know what I'm saying? So at this point in time, it does make sense to mine at a loss, but that the source of that money, the revenue, has to come from the business, right? Through other means. If you're taking $1,000 from your personal pay, that doesn't count, because let me tell you why. $1,000, to get $1,000, you'd have to be paying yourself like maybe $1,400, right? So you're actually losing $1,400. You're actually losing more. So if you're working for someone as an employee, it doesn't make sense to do this. For me, my personal situation is I do software development, I do consulting, all right? So I make money through my clients as revenue, right? I can then take that revenue to grow the business in other ways. I don't need to pay myself, and I don't pay myself that money because I want to grow the business, and it's the cost of doing business. I have other expenses as well: cloud hosting fees, software licensing fees, electricity, the cost of my cell phone bill, things like that, internet. These are all costs of doing business. Mileage, right? These are all costs of doing business. The drive to a client's office and back, that's mileage, right? It counts as a business deduction. So guys, I'm gonna just kind of cut it off there and say, yes, it does make sense to mine at a loss, but only if you're funding that from an existing business. So if you want to do crypto mining at a loss and you want to survive in the bear market, and do it for longer, my recommendation is you guys go start a business. I don't care what it is. If your business is started from scratch is crypto mining, this won't work either. But you can take existing. Here's the thing: you can take existing profits from the business. Let's say you've been mining at a profit for 3-4 years, right? And you've been saving that Bitcoin up or that Ethereum up. You can then use that money and pay that as an expense, and that will balance against the previous taxes you might have paid in the past on those gains, if that makes sense. Okay, I'm not an accountant. I'm not a professional financial advisor. Don't do as I say. Take what I say with a grain of salt. But I'm saying you can mine at a loss, and that is why these gigantic crypto mining farms who have been making millions and billions of dollars per year are continuing to mine at a loss, okay? Because it makes more sense to mine at a loss than it does to pay that out in other ways and lose that money in taxes. Okay, guys, I'm going to leave it at that. I'm not going to talk too much more about that. If you have any comments or suggestions for this video, if you thought if my math is wrong, if it's right, if you see other scenarios, please share it with me. I'm interested in hearing what you think. So, like I said, guys, it makes sense to mine at a loss, but only in those given circumstances. All right, guys, I'm going to cut the video short now, and I will see you in the next one. Bye for now.